Hey, what's up guys? My name is Moda and welcome back to the Mining Stacker YouTube channel. Today's video, we're going to have a nice little discussion about mining in the bear market. We're going to talk about which metrics matter the most. Everybody tends to be focused on ROI time, profitability, and not necessarily focused on the one that does matter, which in reality is the yield. Okay, so we're going to talk about different things, why that is 100% always going to be my focus, especially over the other two, and why I don't look at ROI. I focus on that yield, right? So for me, when I'm determining value on ASICs, or in reality, any mining hardware, this isn't specific to ASICs, but the examples we're going to use are with ASICs just because they're the most exaggerated and they're most easiest to kind of see, right? So we're going to just talk about that and just the strategy overall. Right, because it's been the biggest question I've been getting, like, oh, why are you talking about miners when, you know, the payback time is 3 years? That's a horrible investment. Gonna look at my perspective and why I kind of disagree with that whole sentiment, right? So if that sounds good, guys, stay tuned. Let's get to this thing. So before we fully get started, none of this is financial advice. This is just me talking about the way I look at things and even just my specific strategy when considering any of these ASICs, right? We're going to specifically talk about ASICs, but like I mentioned, in reality, this applies to any mining hardware, okay? So let's go over the basics. Number one, huge write-offs with ASICs, okay? Number one, any mining hardware, if you run your setup as a business, those are write-offs, right? The hardware itself, the electric itself, there are benefits in that alone. So that's why for me, why you'll hear me say it over and over, my goal is break even or better, right? As long as it's break even or better and I'm comfortable that it's break even or better, to me, it's a arguably better form of DCAing, right? Do I only exclusively do one or the other? Absolutely not. I also DCA, but it's just another tool to DCA along with my regular buying schedule, okay? Another big thing you have to factor in is how you're looking at this thing. Okay, some people look at it as a way of passive income, like, okay, I'm going to get this unit. I see it's profitable. I'm going to sell my yield every month and just pay the electric out of that yield that it's generating in order to use that profit. In the current market right now, for the bear market, that's been a strategy that's been proven over and over to not be the best. To me, again, this is my strategy, the way I see it. Mining and hodling, whatever you can afford to pay electric out of pocket, that should just be potentially your max. Again, it's up to you to decide how you want to do it. For me, like for example, if I only felt comfortable paying, let's say 1500 watts, whatever your electric rate is out of pocket per month, that would be the max I would allow myself to mine with. Okay, so like my specific example, I have my 330 amp circuits maxed out, so like about 15,000 watts or so. That's what I'm comfortable paying out of pocket every month, and that's where my limit is, okay? Because at this point, I don't want to go beyond that because I don't want to pay more than that electric per month, as that's already a pretty hefty amount that I've been doing for the past 2 years, okay? So because I look at it that way, because I do it that way, as long as I'm break even or better, I'm fine. I'm not worried about daily profitability because I'm not selling daily. I'm not selling monthly. I'm barely selling at all, especially this past year. Okay, initially the bear market first started, I was profit taking and such, but just to reinvest essentially. Wasn't doing to profit take and use that money for something else. It's just to reinvest into the existing hardware. Okay, so like for me, that's definitely been a strategy that has worked, because that way you're taking advantage of the price appreciation. That's the biggest thing in this current climate, in this current bear market, is to stack as many coins as possible, get all that revenue that you can. Okay, especially right now while things aren't as popular, yield is higher, so the amount of coins you're going to get is higher. This is going to be just like we've done those videos in the past year, 2 years ago. We do them every like 6 months or so. This is still going to be one of the better times to mine, period. Okay, in 6 months, 8 months from now, when the market is hot, profitability numbers are going to be higher, but guess what? Your yield number is going to be so much lower. Okay, that's kind of the mindset you have to have. Get out of the mindset of like looking at different profit calculators and looking at the payback time. Oh man, it's 24 months, or like this DG Home One, the biggest comment is, oh, why am I going to spend $1,300 on something that's only profiting $1.40 a day? That's what it's making currently. Do you realistically think that the price isn't going to appreciate between now and the next 8 to 12 months? If that's the case, then yes, this is definitely not for you. But if you're a person who believes in the bull market and believes in the 4-year cycle, we know that typically next year can be pretty lucrative. Okay, so like my mindset, I am looking at that future price potential. Is it going to reach these previous all-time highs? Depending on the coin, probably not. In some cases, yes, other cases, no. And that's where you have to determine which coin do you think is going to appreciate the most. Like that is one of the most common questions I get. Like, which ASIC miner is the best? The one that ends up being the best is the one that mines the coin that appreciates the most. If we had that crystal ball, we'd be able to go all in on that one unit. In reality, we don't know. It can be the L9, it can be the K7, it can be the KA3. We don't know, right? And that's kind of where you're placing your bets. That's why it's important to not only look at profitability and look at yield, look at that individual coin. Are you bullish on that coin? Do you think that coin will appreciate? Okay, don't just base it off of the market cap. Oh, I'm going to go for the one with the lowest market cap because it can do 100x. You have to see if this thing even takes off, right? So that's why it's different strategies, different things to look at, different risk levels. Okay, so like with all the ASICs, there's many different risk levels. Some are going to be more lucrative than others. Some are going to be safer plays than others. So like for example, typically the safest bet tends to be what? Bitcoin. Okay, because that's the one that out of all the cryptos, that's the only one that I would probably hold after this cycle. Okay, all these other coins, who freaking knows, right? So when I'm saying I'm bullish on this coin, but it's bullish for this cycle. Okay, anything beyond that, the only coin I feel long-term wise is going to be here is going to be Bitcoin. Okay, so in a lot of our cases, the reason we do mine these shit coins, we do mine altcoins, we do these other things, is to eventually get more Bitcoin, right? Sell it for Bitcoin sometime in the bull market, or sell it to fiat and then buy Bitcoin next bear market, right? Different strategies, different things to think about. But if you focus on this like payback time and the ROI on these individual units, you're never going to get anywhere, because in reality, it's not going to make sense looking at it that way. For me personally, it only makes sense to go in if you're going to mine and hodl, right? And it's up to you to determine what the extent of that is. Maybe it's only a couple of these little 100-watt units. That's fine. You could do that. You could DCA. You could just buy the coin. I mean, regardless, like, yes, this is a mining channel. Yes, I'm very pro mining, but more so than anything, I'm pro stacking coins, right? So you don't even have to mine, right? Sometimes you're better off buying the coins. That's also been proven completely, right? That's how I got all my initial bag of kaspa, was buying the coin back in late 2022. That's been the biggest gainer for me, period, out of everything. But I got the insights from that coin from being into mining, looking into those coins, having those insights. So even if you're a person who, used to GPU mine or is GPU mining, oh man, it's crappy, don't lose sight of that hobby, right? We have very good insights on projects when they're early, if there's potential there. Okay, it's going to be different timing. Like currently right now, GPU mining is looking pretty crappy, right? Because there's not too many good prospects currently. Okay, but that doesn't mean that I'm not going to look into there, see which coin looks promising, because that's an easy way to get in early. Okay, but if you're looking at like profitability and like looking solely focused on this, because this is another comment I get too, is why would I look at something like a K7 that's only profiting, because currently the thing's only profiting on a daily basis $1.37. It's like, why would I, spend $3,000 on that when I can buy, for two 7900Xs, it's profiting about $1.10, right? Profit wise, it's almost the same. Why would I go into there? You shouldn't focus on that profit. Like technically, if you're selling daily, that is a true statement. It is true, right? If you're mining and hodling though, that's where things change drastically, because of the amount of yield you're generating, the amount of revenue. For example, with this example, your actual revenue is only 87 cents, right? So even if, let's say, we go up 5x, right? That brings you up to potentially $4 in revenue, right? With that appreciation. Versus in the example with the CKB miner, it changes drastically because your revenue is actually $8.12. So a 4x increase in the price of the coin brings it up to $32, right? And then subtract your electric, and then it's substantially different. So yes, although they're both making about $1 a day currently, I'm not focused on the current price. I don't care about today's price. I'm not selling today. I'm selling in 2025 when it matters after that price appreciation. That's where my mindset's at. Regardless of what I'm mining, whether it's ASIC mining, GPU mining, CPU mining, these DePin things, anything. That's the mindset. That's what I'm looking at. I'm looking at future potential value. Okay? That's where things become more lucrative, because now at this point, and again, we're going to use the examples with ASICs just because it's the easiest to explain. That's why even this guy being as expensive it is, I'm not advocating to buy it. It's just the example I'm going to use. But it's like, oh, it's 11 grand and it's only making $15 a day. It's okay. That's what it's making now. Okay. So if it's making that much now, when we are in the depths of this freaking bear market still, imagine what it makes if it hits what you think it'll make in the bull market. Okay. So bear market highs are in the 20-cent range. Previous all-time high was 73 cents. I would say a 50-cent Doge is fairly conservative for hitting sometime in 2025. Right? And realistically, I can see by spring of 2025 being over 25 cents, being 30 cents, being in that range for quite a while, ultimately peaking somewhere beyond that, right? Might happen, might not. Maybe it flops, maybe it just stays in this range all of 2025. Who knows? But I'm betting on that speculation, okay? So now when you look at it like that and you are mining and hodling, that's where things do drastically change. Okay, so a couple things you have to factor in though. It's not as simple as just getting the number. Okay, well, I think this is going to 5x, so I'm going to multiply this by 5. Yes, to an extent. But what also happens as the price appreciates? People are now more interested in mining this coin. And what happens when that happens? One of two things. Number one, the prices of the ASIC machines go up, number one. Number two, the hash rate and difficulty is going to go up substantially. Okay, so you kind of have to factor that in as well. And it's up to you to determine how high do you think it's going to go? Do you think it's going to be drastic? It's going to be a 20-30% increase? Or is it going to be something where it's a more massive increase? And this is where you have to really understand the dynamics of the coin you're trying to mine or that algorithm. Okay, so like for example, with kaspa, we've seen the monumental gain in hash rate where it's gone up 500x in a year, right? That's something that's going to happen with those, core-based algorithms, right, that are new to ASICs. So we saw with kaspa, we're going to see something similar with the lithium, we're going to see something similar with radiant, etc., etc. The reason I'm highlighting script is because this is a much more mature network. Okay, so yes, the hash rate and difficulty is going to go up, but is it going to be something where 4x's, 5x's, and yield is now a fifth of what it was? I don't think so. Right? Reason being, let's do some math. Let's not just speculate. Let's say as to why we think that. Okay? So we know, so we're going to use for reference the L9 just because it's the biggest unit. It's the most popular. And we'll go with this thing. Okay? So currently we know this thing is 16 gigahash. Okay? Let's look at Doge's or Script's overall hash rate, which is currently at about a little over a petahash. So 1.08 petahash. Okay? If we look more on a long-term scale, here it's kind of all over the place. Let's do it more long-term. Let's do it all, actually. So we can see here they have it way lower. We'll go with the 1 petahash here. So let's just eyeball it. Easy numbers, easy math, 1 petahash. Okay. If we go to a hash rate calculator, again, let's do an extreme amount. Okay. We know 1 unit is 16 gigahash. Okay. Let's do something pretty extreme. Let's say they end up selling the equivalent throughout the bear market, not on the initial batch. Again, we're going to do something exaggerative just to kind of prove a point. Okay. Each unit is 16 gigahash. Let's say between the L9, the AlphaPex units, and whatever else comes out, and all the L3s that are currently off, all plug back in because Doge starts pumping. Let's say they all come back online, and it's the equivalent of, let's throw a crazy number out there, 80,000 L9s. Okay, so again, 16 gigahash, we're going to multiply it by 80,000 because we're speccing that potentially the equivalent of that much hash rate. Do I think it's that much? Hell to the no, but we're just, again, this is just for comparison purposes. So that would bring us to 1.28 million gigahash. Okay, so now we plug that into our little converter, and that brings us to 1.28 petahash. Okay, So again, 80,000 L9s would increase the current hash rate by 1.28. Okay. Currently, the current hash rate is about a petahash. I think it was like 1.3 earlier, right? So we'll actually go to that because you can see how it spikes. We'll go by this biggest spike. Let's go through one of these, which is what, 1.3, which is why we decided to do that number. Okay. So if 80,000 L9s, the equivalent comes online, that's how many units it's going to take for the entire hash rate to double. Therefore, your yield get cut in half. Okay. So yes, the hash rate will get affected by these more units, but this is a much more mature network, and this is why we're saying this is a much more stable network. So is the hash rate going to go up? Absolutely. Is it going to go up by the magnitude of what we're seeing with kaspa and such? No, because again, this is a different animal. This has been around a lot longer. For the altcoin ASICs, this is one of the more mature ones. Okay, so again, just for reference, it would take that many units for the hash rate to double, right? So do I think it's going to double? No. Do I think it's going to go up 30, 40, 50%? Potentially, right? We're going to have to wait and see how high freaking Doge rips. But that's one thing to look at. So when you're factoring that in, make sure you understand the dynamics of that and what to expect there. But again, easy math. Let's say, let's go to extreme and factor in that number. Let's say we're going to just have it, right? Let's put this up to, it's 186 currently for the amount of Doge you'd get. Let's just round it up to what, 190. Or let's say 180. So bringing you down for your 24-hour yield to be about 90 Doge, okay? But we're factoring in that Doge will potentially 5x, okay? So I think that's fairly conservative. It's currently at 10 cents. We're saying it'll hit potentially 50 cents sometime in the peak, okay? Will it, won't it? We don't know. I feel fairly confident that it'll reach 50 cents at some point, right? So just depends on how conservative you want to be there, or do you think it's going to go beyond the bull market price? Do you think it's going to go beyond 73? I personally don't think so. Maybe 40 cents would be a more realistic number. But let's say, again, we're going worst case scenario, let's say it goes in half. So we're going down to 90 Doge, and let's say it only goes to 40 cents, right? So at this point, we would take our 90 Doge, multiply that by the 40 cents. So potentially bring you up to what? $36 a day in revenue. Okay. That's just off of Doge, right? You have to factor in your Litecoin and now even your bells as well. Okay. So again, it's as end depth as you want to make it. The majority of the bulk of the money is going to be from Doge, but you are going to get some from here. So even just eyeballing this, same thing. If you drop it in half and then multiply by 4, you can add that onto it as well, right? So let's just easy math. Let's just say another 10 bucks, right? So 45, and then let's say maybe $5 for a bell, potentially 50 bucks a day in revenue. Okay. That's where things change, right? That's where it's no longer your payback time isn't 24 months. Okay. That's where, again, let's do 50 times 30. So 50 bucks a day, 30 days in a month, 1,500. So now 11,000. Divide that by the 1,500. So now it goes down to 7 months. Okay. So this is where you kind of have to play around with the numbers. You have to kind of see what makes sense. Are you going to mine on it for that long? Are you not? Are you super bullish on Doge? Are you bearish on it? Do you think it's going to be something else? It's up to you to decide, but this is kind of the numbers I play around with. I don't necessarily think that's going to be what the numbers are going to be again, but this is kind of the thought process. You can input your own numbers. Think about it as you will. I don't necessarily go too in depth on it. I know some people love going super in depth. Sometimes I will to play around with it, but generally I do more just general estimates like this, right? And then it's up to you to decide. So I kind of do like worst case scenarios, kind of like this, and I do also best case scenarios to kind of remind myself of what the projection could be. Okay, so when you look at it like that, things do change drastically. On top of the fact that, again, if this thing does the equivalent of paying itself off in those 7.3 months, then you have the potential of selling it after that point. Maybe after 7 months, you know what? I want to go a little risk off. I made that amount of yield already. Let me sell the unit and let me sell it for potentially what I paid for it. Now used, it's going for 11,000 still. New, they're going for, let's say, 12, 13, 15 or something. Or maybe it goes crazy and it goes well beyond that. Or maybe it's not so hot. Maybe they did produce a ton of units. Maybe Doge is struggling. And maybe it's slightly under. But at this point, if you made that amount already, even if you're selling it slightly under, let's say at 9,000, 8,000, you're still up by a good amount, right? If you want to do that, or if you want to just hang on this thing and just mine till the wheels fall off, right? There's different strategies, different thought processes, and that's where even I'm a little torn. Like, I have my older ASICs kind of almost starting to turn into the fact that just mining them until the wheels fall off, right? So it's really hard to say. It just depends on how bullish things get, whether or not a replacement comes out. Like, there's just a lot of factors that go in there, but that's kind of the thought process going along with it, right? So I always focus on the yield. I'm always looking at long term, right? So that's why I don't really ROI my units or focus on this as well, because another thing to factor in, I'm not trying to ROI that individual unit. I factor my farm as a whole, right? So I'm combining all the revenue streams from all the ASICs, from all the DePin projects, from any of the GPU coins, any of the staking coins, staking rewards. I'm using all of that, right? So I'm not just ROIing one individual unit, right? So then at that point, my payback time also changes drastically, because if I wanted to, could use it towards that if I wanted to pay it off for whatever reason, right? But in my case, that's not what I'm trying to do. I'm trying to just stack as many coins as possible here, right? So that's why you'll always hear me talking about focus on the yield. Don't focus on profitability, because, you know, if a coin pumps, it'll change drastically. If a coin dumps, it'll also change drastically. But what won't change so drastically is your yield unless the difficulty goes up, right? So that's where my focus is, and I'm focused on that yield because I'm focused on bull market prices. I'm focused on selling in the bull market. I'm not selling right now. I'm not selling on the lows. I'm selling at the highs. I'm selling at that time frame. Okay, so kind of to each their own. You have to look at different things and understand the different projects. So I know, like, the reason I'm mentioning Litecoin is because, like, with the AlphaPex unit, lots of people were like worried of it, like, oh man, the payback time's 33 months. Again, it just depends on how bullish you are here. And with these smaller ASICs, it makes it much, much easier to pay that electric out of pocket, right? It's a lot easier to pay 600 watts out of pocket versus, 3,000, 3,500 watts, right? So that's where the appeal is with these guys. It's not looking at current profitability. It's looking at what it could be worth, because not only the amount of revenue you're generating, but that unit itself, right? We're now at the point where we're nearing the end of this bear market. We're going into that bull market. And if the prices do what we hope they're going to do, the prices of these guys are also going to be worth significantly more. Especially, in my opinion, some of these may be a better value in a sense, because it's more likely that they may do multiples. Okay, it's going to be extremely hard for the L9 to, let's say, 3x in price. It's possible if things get crazy for this thing to go up to 30 grand, because I mean the L7 was at like 25 grand for a while. It's just hard to picture it now, and it's hard to picture it like being able to sell it easily at that point, versus something like the DG1 Home. I can see it if things go super bullish. It's the best home unit for script ASICs to sell it for 2 grand, right? It's be an easier sell at that point versus something more extreme on this end. Okay, so again, it's different strategies, it's different things to think about, different outlooks, and just depending on the coin you're mining. Okay, because I know it seems hard to say, like, oh man, I don't think it's gonna get that bullish. It can, and it has happened, right? Like we were talking about with the K7 earlier, and this is one that it kind of did happen already, right? We got our taste early because it pumped extremely hard, extremely early. It did retrace pretty aggressively, but again, this is the all-time chart for CKB. And you can see here that pump that happened back in April. Yeah, back in April, it did almost reach the previous all-time high already. Okay, so this is one we got to mine during this boring time over here, stacked a lot of yield. And it's one that did kind of do what we're speculating already. Obviously, though, it did freaking retrace. So it would have been smart. Shout out to you guys who did take profits up here. I only took like 10%. I wish I would have taken more. But I do feel like in 2025, it'll at least reach these heights again, right? So at the time, during these boring times, right, when we're in the red, if you went to mine the ASIC and looked at profitability, it was not very hot at all, right? But during these times, right, especially during the good times, before the halving, before the price increase, we were generating, depending on which model, about 100,000 CKB a month, right, for pretty much a whole year. So during that whole year, if you looked at the profit calculator, we were barely making a couple bucks a day throughout that whole time, right? And if you looked at the ROI time, the payback calculator, it was probably going to be ridiculous, right? Now, though, especially if we compare it to this peak here, that's where things change drastically. Because again, we're making 100,000 CKB a month. At current prices, it's 834 bucks, which is still pretty good. But again, you can 4x that, right? So again, currently we're at 8 cents. It was reached a peak of 32 cents. Okay, so during that time, we were making the equivalent of $3,200 a month. Okay, so that's where the spec comes in, and it's up to you to determine which coins do you think will do that. Like again, this pump I was definitely not expecting, and I wasn't expecting it to pump this hard. Realistically, again, I'm very conservative with my numbers. My bull market price that I would be extremely happy with was only 2 cents, right? In this pump, it went well beyond that. Okay, so again, any of you guys who bought the K7 during launch, you should be well over a million, or probably like at 1.3, 1.4 million, which again, at that peak, worth a good chunk of change, worth well over $35,000. Okay, all from a $5,000 ASIC. And shout out to you guys who bought multiples at that time. Great move, right? But that's the hard part, though, is we don't know which ones are going to do this, right? So we place our bets on the ones that we think we will, because obviously, like, yep, I did get this one. If I knew this was going to happen, I would only be mining CKB during that time, right? But I didn't, right? We're speculating, we're hoping, we're purchasing ASICs based on that, right? So for me now, that's why I'm like focusing more on the ones that I have more confidence in, right? My spec plays somewhat played out. This one played out well. The HS3 has been somewhat of a dud. Still early though. We'll see what it does in the bull market. Again, it's just mining and hodling. We'll see what it does. An example, another one is the KA3, right? Currently, you're definitely better off buying the coin currently because of how much it's retraced, right? I'm still bullish on it. I still think it will do well come the bull market. But again, those are the risks that we're taking, okay? And it's just based on price appreciation. This is specific for the bear market. Obviously, things are going to change in the bull market, and that's where the possibility of actually doing like a passive income thing and profiting will be a thing, because as we switch into that mode sometime spring of 2025, I'm definitely going to start doing that, right? So that's when you have to have your like exit strategy kind of built in and kind of play it out. Plan these things, guys. Like, look into the future, see what you think, right? And I get it, it's very hard to enter in this time, and I understand, like, I get it, this is not for everybody. Currently, this is a time where we are speculating, we're trying to get the cheaper prices on these ASICs. It's like when you look at, you know, old videos of previous bear markets and you're seeing people buy, you know, cheap hardware, like, oh man, if I ever get that opportunity, I'm definitely taking advantage. These past 2 years have been that opportunity, right? So some of you guys jumped on it, some of you didn't. And unfortunately, we're not going to really know which one's played out the best until it's happened already. So like 8 to 10 months from now, that's when we're going to look back and say, oh man, the K7 was a good buy. The HS3 wasn't. The K3 did end up being a good buy. That's when we'll find out. But at that point, you're also too late, right? So if you are about that price appreciation, you want to risk it for the biscuit, the time has been this past year and a half, 2 years, right? But is it too late? Absolutely not, right? We're still in the bear market. There still is time. It's just the longer you wait, the harder it gets, because it is going to get to a point, because again, if we go by the cycles, things can start flipping around as soon as like late September, October, November. Maybe it's delayed a bit, maybe it goes beyond that. But we know the time for cheaper hardware is starting to run out, right? And this is why it's kind of important for you to position yourself, whether you want to buy any hardware, whether it's ASICs, DePin things, or none at all, or maybe just buying coins. Again, guys, that's a very good strategy. DCAing is always going to be a thing. And essentially with mining, that's all you're doing. You're ECAing, you're electric cost averaging. You're using your electric to help you DCA. It's just DCA tools. That's the way I see them as, right? So kind of just depends on your outlook. I know things don't look too profitable now, but that's the insight. That's how I look at it. That's why I continue to buy hardware. That's where my mindset is, right? So I'm not looking at, oh, I only generated, you know, $3,000 in revenue this month. I'm looking at that revenue potentially going up 3, 4, 5, 6x sometime in 2025, right? That's where my mind frame is at. That's how I'm thinking. right? Whether it plays out, maybe, maybe not. And this is why I like have so many things, right? I'm into all these DePin things. I'm into these staking things. I'm into DCing into different coins, just because they're not all going to do that. They're not all going to massively do well. Some will massively underperform. Some will barely break even. Some will probably be a loss, right? But you're kind of planting your seeds. You're hoping to get some of those that do have this massive run up. Like for me, I think CKB is going to be one of those, right? If it even just meets these bear market highs, be extremely happy. If it goes beyond that, obviously even happier. Okay, but this is kind of the play, and this is where you have to strategize. You have to look at it. Am I bullish on this coin? Am I just buying this miner because I think it's profitable? Again, it may be profitable now, but is it going to be profitable when it matters in the bull market? That's where it matters, and that's where you have to kind of place your bets. That's why I'm such a big advocate of learning those coins you're mining. Learn about them, learn the tokenomics, play around with them, get in that ecosystem, see if there's something there. Some of these coins, once you actually start messing with them, you're like, man, this UI sucks. It's very slow. It's very dated. This thing is going nowhere. Or maybe it's just the narrative. Maybe that narrative alone can get you bullish on it, right? There's different things to look at, different factors to look at. But again, the key thing here right now in this bear market is stack these coins. Okay, whether you're mining, you're staking, you're buying, doesn't matter, right? Do not focus on stupid metrics. Do not focus on the ROI. Do not focus on, don't get stuck on those things, right? Obviously, you want it to be break even or better. You want it to be at least somewhat profitable. Obviously, the more profitable, the better. You don't want to get something that's losing $4 a day either, right? So you have to look at where we're at, look at the metrics. Is this thing worth it? Run those numbers, play with those things. How's the hash rate? How's the tokenomics? What are the emissions like? Is there a halving coming? There's a lot to it, right? It's not as simple as just looking at this. That's why I say research, research, research. Become an expert in that coin that you're considering mining. Learn everything you can about it. Learn the different dynamics. How bullish are you? Where do you think it can go? Do you think it can go 10x? Do you think it has 20, 30x potential? Right? And that's where like the mind frame with like a lithium is, right? So that's why to each their own. We're not going to know who the biggest winners are until it's happened already. But this is the time to place those bets, to position yourself and get ahead of the game. And hopefully we all have a good 2025. Okay? So I know it's kind of a long one, kind of all over the place, but that's why it still matters, right? That's why mining to me is still a key thing. I will continue to do it, will be doing it. It's been extremely lucrative, as well as buying, as well as stacking, as well as staking. Just stack coins, bros. That's as simple as it gets, right? That should be the goal, right? So let me know in the comments, guys. How are you guys doing? Are you guys kind of pretty much positioned where you want to be? Because again, we're kind of running out of time. If you haven't, set up that plan, set up those goals, and it doesn't matter the extent. I know people get like, you know, kind of like grumpy about it, like, oh man, I wish I could have done this. It's not too late, man. You can still do it, even if it's just, all you can DCA is $100 a month. Whatever you can, again, look at it, potentially what can be in the future. Can that $100 turn into 300, 400, $1,000, $1,500? Sure, right? Just look at different things, stack these coins. Remember why you're here, guys, right? So let me know in the comments how you guys are doing. Are you guys' plans going okay? Are you guys kind of over it? Did you sell all your hardware? I know it's kind of doom and gloom. I know I do these videos and it's definitely more on the doom and gloom side than anything, which is crazy because, again, we're right at the end of this bear market, man. It's so crazy to see some people giving up like right at the end. But again, everybody has their situations. You got to do you. I know I'm doing me, and I know what I see and the potential that's here. Okay. So please comment, like, and subscribe, guys. Thank you for watching, and I am out.